Okay, great. So here we are on Sniper. It is Monday, December the 16th. We're going to look at certain setups here on starting off with gold, and then silver, and then Dow and NAS, the four most popular ones. But we will be looking, if anybody else wants to look at anything else, we can look at that in detail as well. So as usual, as we all know, I like to start with the economic calendar first. So that's always something that you should do even before you look at the charts. You want to know what's coming up. We all know what's happening on Wednesday, right? Everybody knows red folder news on Wednesday. If not, I'll tell you in a minute. So I use myfxbook.com. Jim uses forexfactory.com. They're both good sites. You can use whatever you want. But here, I go to myfxbook.com, and then under here on economic calendar, it will show up. Make sure you've got your local time frame up here, so the times will appear in your local time frame. So this is Monday. Started off everything with a check mark. Has already happened along the left-hand side. It'll tell you what country and what denomination we're looking at. So if you're looking at indices and you're looking at any USD pairs, then obviously you want to be looking at something. Can you mute yourselves out, guys? You want to look at the USD and the American flag. Cheney, can you mute yourself out, please? So if you're looking at CAD, obviously Canadian with the Canadian flag, and the reason you want that is because sometimes you get USD and it doesn't actually have a UK flag next to it. And here, for instance, Euro will show different countries that it's going to affect, even though it's Euro. Okay, so we've got all these different countries here that have been affected by different Euro rates. This is all Euro, but you can see it's all been affected different countries. So make sure you know that. We're just going to concentrate on US stuff right now. So obviously from 6:30 we started having some red folder news. We had PMI at 745, which just happened. And we'll take a look at that. Got nothing left for the rest of the day. Again, Tuesday, if you're doing GPP, obviously keep an eye out for those. But our first USD comes here at 6:30 tomorrow, retail sales. And of course, like I said, on Wednesday, you've got a couple of red folder news here. Building permits, it's red folder, it doesn't often move the market. But here's the first one, midday, the economic projections here. And if you want to know what that means, you can click on it and another window will open and it'll tell you it's the Federal Reserve, obviously, and the Federal Open Market Committee. They both get together to discuss and decide upon interest rates. So the first indication you're going to get is the economic projections from the Federal Open Market Committee. And later on, at the same time, sorry, is the actual interest rate decision. So, and then after that at 12:30, the Fed press conference. Now, the importance of that is at 12 o'clock, they're going to actually make the decision. You're going to see big moves. After 12:30, they have a press conference. And from 12:30 onwards, usually 10 to 20 minutes, the press are asking questions from the Fed about, what their decision was based on, what they're looking for the future and everything. And depending what they say there, that can move the market dramatically as well. Sometimes they make mistakes. Sometimes they say things that can be taken out of context. Sometimes they give you a clear indication of where they're going and the markets will react. So just be careful. Some red folder news is big, and some of it, even though it says 12:30 when it's a conference, you can be, be wary of what's going on for 10, 20, maybe even 30 minutes after that time. So I won't go in for the rest of the week, but just to know that's the big one coming up on Wednesday. So that's why the markets, we should see kind of some consolidation probably for the next 2 days on that. So let's go to the markets now. If you have any questions, obviously jump in and ask them. I'll be happy to answer them for you. While I'm looking at the charts, I'm not looking at the chat. So if you want to unmute yourself and ask a question, that's the best way to get my attention. After the session, we'll be looking at the chats after that. So gold, again, we like to start the higher time frames. We go to the 4 hour. We want to see what's going on in the 4 hour. So we see some nice, we see some highs up here around that 2720 range. We can see that the dots here on the 4 hour show us there, and exactly the same here. We did wick up here, but I think this is, because we got 2 touches here, we're much stronger. If we go along here, we've got some range right here and here, just below, just above here. So there's a pretty strong line here for resistance. So what's happening there. We're going to be seeing a lot of range in here. This is a lot of accumulation here, and if you take that further out, we're bouncing off that mid-range here. So what I like to do with my rectangular box here, when you set it up here, is make sure when you do your settings on here, which you can do here, is I like to put a 50% line in here, so I know where the 50%, because these ranges doesn't mean the whole range is taken out, but the midway mark is something we look at quite closely. And you can see with gold on the 4 hour, we touched this mid-range. Now we're heading up. We're in a little bit of indecision here about where we're going to go on the 4 hour. We do have some other, there's some other areas down here that we can see. It's been hit several times along here. So this is going to be acting as resistance. But if we break through that, we can't discount the fact that we've got, double tweezer bottoms here, and there's another range right the way down here. We do have some fair value gaps right here. There's one here. There's a few down here. So we could be looking at possibly coming down to these levels. This one, if we take it along here, is going to pop us in around there. So that could be a target. This one down here could be another target. And obviously this low down here from back here is another target here. So let's drop down to the 1 hour, see what it looks like here. Same thing here. We're still not getting off here. Primary trend line has turned red right here. You got this big drop off here, came up, wicked right the way down here. So right now on the 1 hour, I forgot to look at the primary trend line on the 4 hour. Yeah, the 4 hour has been up from here, primary trend line, but we're right on the primary trend line. We dropped below it, we went above it, coming down here. So we're not getting a clear direction here on the 4 hour. The blue is below the red on the secondary trend line. So right now we're looking bearish. We did drop down right here. So this is a bearish direction so far. 1 hour bearish here. We have to see what happens down here. We are oversold down here, obviously. But primary trend line, secondary trend line. It did almost cross here, the secondary trend line. It's now pulling away a little bit. So again, but look how narrow these Bollinger Bands are. So don't forget, you know, when the Bollinger Bands expand, we're seeing some volume, we're seeing some movement. When they contract like this is not an area that we're looking to get into. Contraction here, nothing happened. When it opens up, we get a little move. Okay. Let's drop down to the 30 just to see what happens here. I did forget on the settings here, come in here and put your labels on here and count down to bar close. So this little thing comes up here showing you how long you've got for the close of that candle. Because it's a 30-minute candle, we're halfway through it, got 15 minutes to close. As you go down, the price tends to squidge up a little bit. You can right-click here and reset price scale, and it will start moving up. So, you know, we are right in this range now. We are oversold. We've got to wait and see, is this going to bounce off here and head back up or not? We can also, when we're looking at these, you can also throw a fib retracement. You can go from the recent highs to the recent lows, and you can see here, you know, we bounced off the 236. So if we continue going down, this is going to continue heading downwards. Hasn't got anywhere near the 382, let alone the 5 or the 618. So this is still looking very bearish. This is a 30-minute. And of course, what we do have also here, lower highs, lower highs, lower highs. So we've got a trend line down here that we can draw. And we would need to start breaking that area here if we're looking for bullish signals. But right now it's looking bearish. Let's see what happens down here. Let's go down to the 15-minute. Yeah, below the primary trend line. Secondary trend line is now below the red. We're still below our trend line. We're heading down. We'll see what happens here, how far it goes. As you know, I also like to put my horizontal line here around the 50 so that we can see whether it comes up here and carries on bouncing down again. You can see it did that, came up, couldn't really break the 50, went back down again. It'd go up here, so we were looking because it hit this middle of this range, so it looked like it might do a reversal, but it really, in my opinion, was just more of a pullback. Hasn't broken any fibs, hasn't really broken this high yet here, and it went down, so still looking bearish to me. When we go down, we'll look at our 5-minute. Bearish, 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 bearish. Go the 1-minute. Yeah, nothing to really suggest that this is anything but bearish. Even on the 1-minute here, we got a trend line. If you're a scalper, got another trend line going down here roughly. So we'd have to break that one there first, and then break that bigger one to make it a reversal. So anyway, that's the analysis on gold. If anyone has any questions, let me know. Let's have a look at silver. We can do the same thing quickly. We'll go to the 4-hour. Do the same thing. We got some highs way over here. Let's see. We've got some definitely got a lot of interest around this level here. So we don't need to go back much further. You know, again, this is going back into November. So, you know, but we can see we do have a lot higher highs. So we're nowhere near the all-time high here. So we've got room to move either way. And obviously, you know, we've got much lower and much higher we can go. So we're just looking at the more recent history here. We see, obviously, a nice area around here for support. Whether it'll get that far down, I don't know, because also we have quite a strong area, you know, right around here. So you can see with the little dots just below, above, below, below, above, below. I could draw a range in here, but you know, just to save the screen cluttering up, I've just drawn a line there. But if you wanted to draw a little range there, you could easily come in here and pretty much engulf all those little lines there and show that this. So the blue line would indicate obviously the middle range here, and the box would be your wider range that you'd be looking for it to come back. It did already reject off here anyway. We go down to 1 hour, see what that looks like. Again, well, right now we're in consolidation, so nothing's happening. A very narrow range here. Bands are somewhat small, but again, we're bearish. We're bearish all the way along here. And then my horizontal line in here. That'll do. Yeah, couldn't break. We couldn't really break. Couldn't break. Finally broke, but came back down again. Came back to oversold, overbought. Yeah, this is just in consolidation. Let's go to 30-minute. Yeah, consolidation here. Nothing. We really had two big consolidation ranges, one right here and obviously one kind of right in here. So they're the two ranges we've been trading in lately. Yeah, we're right in the middle of it. I mean, it doesn't mean you can't take these, you know, coming in at the top of the range and the bottom of the range. But again, it's looking very, very bearish. There's our primary bearish line. Let's get rid of that range now. Primary is bearish back from here. And then we had the blue secondary line come up, touch there, but broke back down here. We couldn't break the 50. We went back down again. So this is bearish all the way along here for the last, you know, 20 minutes, 25 minutes. Nice pips there, all below the blue line, all in the blue zone here. Very, very nice sell. Any questions on that from anybody? Let me stop sharing my screen for a second.
That's making more and more sense. So I appreciate you doing these.
Oh, okay, good.
Yeah.
Glad you got that. There's no chats in there. Okay, I am going to hand it over to Jim because he is someone who can tell us all about NAS, and let me make you co-host, Jim. So tell us all about the Dow, what you see in the Dow today and the NAS, and what's your take on everything, Jim?
All right, John, thank you. Okay, so we got the NAS here, and I have marked up a couple areas. So if we're looking at the New York Open, it's right here where my cursor is at 1430 on this chart. Yeah, let me put my countdown here. So we had the London high here previous to New York Open, and we just blasted through it right on the open. All right, and making all-time highs, continuing right after open. And the type of entries that I like to use for sniper are, of course, we got our primary trend line here, and we're above it, so we're looking for buys. And then we got blue above red, which confirms would still be looking for buys in this area. And then I'm waiting for this stochastic here to drop below the oversold line and then to break back up. Now, if you're new and you're practicing this, or you're just using this, stick to one type of entry and that passes the rules, and just work on that. You're going to win more than you lose. And as you become more experienced and understand other things to look for, you're going to be able to eliminate some of the things that would have been losses. Okay. But that'll come with time, because the first thing you want to do is recognize the entries that follow the rules, and then take them. Now, if you've already advanced enough and you can recognize some things that you might avoid, then that's great. Then you can start picking and choosing the ones that, even though they pass the general rules, that maybe you just don't like them. Okay. And so right here is our first time that we get a cross down and then cross back up. Okay. Actually, it happens on this candle here, but it's actually a wrong colored candle. Okay. And so I wouldn't take that, because it would have been good here in this example. Okay. But I wouldn't take that, because having a red candle on a buy is not, the signal is not congruent with the direction that you're trying to go, right? So the next candle, if it was bullish engulfing, would be a better signal. And it's okay that you don't get in right on the candle that crosses up, because you're waiting for that candle to tell you a story that matches what you're looking for, right? And we're looking for buys. And this candle, as an advanced person, you might take it, but if you just stick into the rules, you wouldn't take that, right? But this next one is good, but it's a very big candle. Okay. And so it is 25, 26 pips, which is a lot, especially on NAS. And so one thing we have here is we already have a potential level of resistance here. We came to it twice with a couple wicks. So getting in right at the close of this candle, which is very large, which you could expect to pull back from, right at the same time you got two wicks here, would be high risk, in my opinion. Okay. Now it does go like 16 something pips like that. Yeah, it goes about 16, 17 pips. So there was definitely some potential pips in there. But if you were going to be using a stop loss and you were starting from the close of this candle or open of this candle, which is the same thing, you'd be looking to put your stop potentially below the low, and you're talking about a 36 pip stop. So grabbing maybe 15 pips out of that move with a 36 pip stop is not the greatest ideal move for me. Now, if you did take this trade, it would be bigger than the stop loss that I'm typically using, which is like 20 to 25 on NAS. So if I'm going to use a 35, 36, 40 pip stop, then I have to lower my lot size of whatever I'm typically using in half. Okay. And then I'm looking more at something like this. And I want to, at least get a 1-to-1. This is backwards, obviously. So we got a buy long position here. and we're looking to try to get, at least a 1-to-1, and we get some pips there, immediately get a pullback, and then eventually we get there. Okay, I would have just gotten out of this, but if you did use this as a stop, it did eventually move well into profit. Okay, now the next time we get the move that I'm looking for is down here. We get a break below the oversold, and then we get right here on this candle, we get a better signal. Okay, now once again, you're just following the letter of the law. Then we get a bullish candle. It comes and goes through both EMAs up here, and so your entry would be right here, and this is a much cleaner entry. Okay, allows me to use that stop that I like, so 20 would be good. And then, if I'm targeting the 1-to-2, I get 40 pretty easily. Okay, in less than 10 minutes. Right around here, I would have been trailing my stop loss. Okay, once it starts to get to a previous area where it rejected, it could be an area where it rejects again. And so probably after this candle, I'm trailing, close, probably a candle back. All right. And so this probably came down first at the open of the candle, came really close to where I probably would have been trailing, and then eventually breaks up and then hits a TP. Okay. And then if you had a higher TP and you're trailing, your stop loss is down here to start, and then eventually, as this kind of moves away from your entry, you're moving your stop to break even. Okay, break even for me is always a couple pips in profit. Make sure that any kind of spread or any kind of slippage does not turn my break even into a small loss. So this way I'm grabbing positive pips even if it comes back. All right, and then if you're trying to hold this to see how high you can take it, you get a pullback and then you get a continuation, then you're putting your trailing stop here. Then maybe you didn't take your profit here, and maybe you're still holding it, and then you get a low here, and then another continuation with a bullish engulfing. Maybe you bring your stop here, and eventually you get stopped out here. Okay, so there's a couple ways to do it. You can trail with no TP set, or you can just set a TP and still trail either way. And it's just depending on your style. I like to have my TP hit. I don't know, it makes me feel good. It makes me have a positive emotional response to the trade when I have a TP hit. Okay, versus having a trailing stop loss hit in profit. But that's just me. You can do it however you like. Both methods would have been successful here and yielded pips, just depending on where you would have set your TP or how you would have trailed your stop. Okay. Now, we don't get another type of entry that we were looking for until we get to right here. We get another cross up. Once again, it's on a red candle. And then if you would have waited for this green bullish candle, it would have been a loss. Okay. And that's all right. Like I said, if you back test this enough and you just take those entries, you will win more than you lose and your account will grow.
And that one would have been counter trend as well.
Well, I would have been looking for a buy here.
Oh, okay. Gotcha.
And then it would have turned around and hit my stop. Okay. So once you get a stop hit and you can verify that you followed the rules, then maybe something's going on, right? Maybe we're getting a deeper pullback, or maybe we're getting a reversal. So when you come here and you get the next one, around here, if you're just following the rules, okay, you might take this and might be a loss, but you've already taken one loss here that went the wrong way. All right, now you've got this area here that isn't being broken. Okay, so you have all these candles touching this area, and then now you're considering getting in again somewhere over here where these wicks are hitting this area. So this could be a way where you could analyze this and see and to be like, okay, I'm going to just stay out of this and see what it does. There'll always be another setup. If it goes in the direction that it up, then oh well, I missed it. I'll wait for the next one. But in this case, it does pull back, and it pulls back pretty deep, and then it starts to go back up. So what we're looking for is for these lines to cross back up with blue over red in order to be looking for the next entry. Now, once you start mastering the patience and waiting to get in on the type of entries that I already described, then you can start to look for different entries, okay? Because we have an entry here where we had a pullback to this area, and then we had a big bullish engulfing. So you could have entered potentially here and you'd still be in this trade, okay? Now the reason I had the London high here because as I mentioned before on previous sessions, the NAS and the US 30 and the S&P for that matter, they like to break a previous high or low of the previous session, and then oftentimes come back and take out the low of that session. So definitely broke through the high here. But if this price was to turn around and start coming down and working its way down and get below this primary trend line, where this primary trend line turns red and price is down here, I'd be looking at the London low here and the Asia low for potential targets. Not sure if we're going to get that turnaround here. This thing's just continuing to make new all-time highs. But that's why I have these marked up here in case it does come. So I have the London low, the Asia low, and the previous daily low from Friday is all down here. Okay. So if this does turn around, that'd be what I'd be looking for. We'll jump over here to US 30, and US 30 actually gave us the takeout of those lows and highs like I just described. So at 1430 is right here on this red candle. So we have the London high up here, and then we had the London low here. Okay, so we immediately, after two candles, took out the London low, created a bottom here for New York, just to keep an eye on. I marked that up. But then we came out and we took out the London high. Okay, and so what are we looking for? So below the primary trend line, blue below red, we're looking for sells at this point, right? But we're too close to market open here. Too volatile. You don't really know what direction this is going to go. And so we do get a type entry here, but it is very close to market open, just 7 minutes. But it is kind of textbook, and it does go, if you were to get in, I mean, it goes 20 pips. So there's some potential pips in there, okay? And then it starts to come up, right? So it tries to break the primary trend line here, rejects back down, and then breaks it here. Now, according to the entry that I like to use, we don't get an entry all the way through this move, okay? But once you start to add some additional confirmations to what kind of trades besides the textbook trade that I like that you're willing to enter, okay, well, we took out the low here. So that's one indication that we could start heading towards the high. And then we do get a cross up here of the EMAs. Now we did reject the primary trend line here and come back down, but we do get a break below and then a cross back up, okay, around here. And then we get this bullish engulfing that engulfs these 3 candles to the left while being in an uptrend on these shorter time frame EMAs. Okay, so you could have potentially got in here with a different type of entry confirmation, and then obviously this runs up, and once this got to the primary trend line, I'd be trailing, because oftentimes primary trend line can be an area of rejection, and so I don't want to give back the few pips that I have here and in a potential loss. So I want to make sure to trail close in profit, so that if it breaks, I'm good, and if it comes back, at least I grab some pips. And then this eventually does run quite a bit of pips away from this entry here. I would have targeted the line itself, the high, with 73 pips, 72. Okay. And then obviously it goes on probably to 100 or so. And so now what are we going to do? So now the market can kind of do what it wants when it takes out the low and high. What it does when it takes out lows and highs, it takes out liquidity. People have their stop losses in these areas from the previous session. And so when the market comes down and crosses a previous session low, then it basically wiped out people's stop losses, took their money, and then now can go and take the people's money up here. And so once it does that, then it has the volume to continue in a direction whatever it wants. So I can't predict here whether this thing's going to come down to these lows. There's a gap here from the market open on Sunday afternoon, Sunday evening. So there's a potential area where it can want to come to. It doesn't mean it's going to come there today. And so right now what I'm looking for is just kind of not trying to predict what it's going to do, but just looking for trades that follow the rules. Okay, so down here we didn't really get an overbought while this was crossed down to take any of this, and then on the way up we didn't get an oversold down here. We're getting one now, but we didn't get one during this whole move. Okay, so right now we might be getting a setup where if we close down here in red, then this will stay below here, and then we get a bullish move up where green candle breaks these 2 EMAs and breaks through this line, then that will be a buy indication. Okay, so let's just see here. Let's turn the timer on here so we can just kind of see this in real time. And we'll just sit here. All right, we'll wait here, and then just as an example, so we can see this live. All right, and then after this, I'll be done. We can take some questions. So I don't like to get in the middle of a candle. Okay, let me just see if I can. So I'll show you right here. So this wick would have looked really good. Okay, this would have come down, touched this line, and then it would have been up here. This line would have been up here with this wick, and if you would have entered mid wick, you would be entered way up here, and then boom, loss, right? And so that's why I like to wait. So there we go. We got a big move. Okay, so this would be an entry if you're just following the rules. Candle's a little big for my liking. Okay, so I would have I probably kept my position the same size because it's not too big. Yeah, so 25 is too small to stop. I'd probably just use 30, and then I'd be targeting the high up here. See if we can get back up there. Gives me a 1 to 2, and we'll see what it does. But there we go. We can just keep an eye on this. We can look at our own charts as this pans out, but we'll see what this ends up doing because everything else followed. We even got a retest off the primary trend line down here, and and then a big bullish candle, engulfs candle to the left, breaks through the EMAs, breaks up through here. So everything is good as far as the rules. And so we'll just see how that goes. But that'll be it for my analysis today.
Excellent. Great, Jim. Thank you very much. Appreciate that. Anybody have any questions they want to ask on any of that? We'd be happy to run through anything again for you or look at any other pairs or anything. Don't see anything in the chats. Okie dokie, I don't see any of that. So let's stop the recording.